Good morning. Good morning, good morning, good morning. We just got going, Rob. Looks like a holiday weekend class in here, guys. Good morning, Dunk. Good to see ya, Ron C. Always love a cup of Java. Hope everybody's doing great today. Good morning, Erla. Cheetah, nice to see ya. It's Friday, guys, and remember, it's a holiday weekend. We've got Labor Day on Monday. Which means that today's market, we're not sure what's going to go on with it, right? Sometimes holiday trading is a little sketchy. This is one of those days where I love to get paid. Thanks, Ron. I actually caught another one. I took 2 trades in the big NASDAQ. $1,800, 2 trades. Just odds favorable momentum and a clear path. Who would have thought that's what it takes, right? So thank you, Ron. You taught me that trade. I learned from you guys as much as you guys learned from me. There's no doubt about that. ForexFactory.com. Who'da thunk it? Put us together, man. We could take over the world. Or at least a small portion of New Jersey, maybe, right? Maybe JN will let me teach. Maybe, if I'm lucky, Rob. Guys, ForexFactory.com. Every morning I'm looking for news. Every morning I want to make sure I don't jump in front of a freight train of emotion. At 8:30 there was the core PCE price. I wasn't in front of it. I was making breakfast because I don't trade in the news. But at 9:45 this morning, guys, we have Chicago PMI. Good morning, Zorro. And at 10 a.m. we've got the revised University of Michigan consumer sentiment. Both of these are medium impact. They may or may not affect the market. The reality is I don't have any idea if it will or won't, but I do know every time I see an orange box or a red box, it tells me to go do something other than jumping in the market because there may be an emotional reaction from the people that are moving stuff. And then guys, every morning I love to come to the Nexgen website. This is where the good stuff comes from. I'm gonna slow roll today, guys, because I have this feeling I'm going to be flapping my gums trying to make stuff last longer than it needs to. Everything comes from the education page. And the first place I want to take you on your tour is the software user guide. And this is your NinjaTrader how-to. So Steve Diego, a lot of the stuff that you and Jason went through, and that you kind of sparked this for me, thank you, is right here in the NinjaTrader 8 best practices, guys. Making sure that your computer's running optimally for NinjaTrader 8. Making sure that it's not going to sleep. Making sure that you're on the superpower settings. Making sure that you have the right settings put in. How to clean it out. How to make sure that it's fresh. Go through it this weekend. Check it out. This is also where you'll find how to open workspaces. How to close workspaces. How to scale your charts, how to set up stops and targets. This is a world of information. Gentlemen, we call these instructions. You know that piece of paper that falls out of the box at your IKEA dresser? Those are called instructions. My wife told me about them. Apparently you're supposed to read them. But that's what these are, guys. If you're brand new, start checking out this. Make sure that you know how to do everything that you need to do. And then the other one is a trading guide. This is where everything that I talk about every day comes from. We go to great lengths to make your education path as easy as it can possibly be. I promise you this. We try hard to not confuse anybody. And what happens is human nature. You guys just find a way to confuse yourself. Nexgen, if you're on demo, you have the platform to run it on. You have the software. And even if you've been with me for a while, guys, Nexgen gives you the workspaces. We build them for you at the optimal settings. And for whatever reason, people keep changing them. I don't know why. And that's cool. You can do it, guys. You're learning how to use your software. And the easiest way to learn how to use your software, the easiest way to get the absolute most out of your software in the quickest time is to keep it simple, to keep it focused, to keep it very methodical. Yeah, it's crazy, Steve. I've got days where Ninja Trader doesn't want to stay awake, and then I'll run a week. Like this week, I think I've had one crash all week. I don't know why. There's no rhyme or reason to it. And I'm telling you, 98% of the time, Ninja Trader is freaking amazing. And that's that 2% that gets really frustrating. But once again, because we're humans, it's real easy to focus on that 2% because it always happens at the worst times. But man, John's working hard to get this browser version, and his programmers are working hard. And I'll tell you what, he's paying some bills to get it done, and it shouldn't be long. But you can't rush something like that, right? You can't say, hey, hurry up and finish that Mona Lisa. It's going to be done when it's done. So we're trying. Y'all, we're going to focus for the first hour. Oh, really? It's just new computer working it out? It doesn't seem like you should be punished for the new computer, right? Guys, we're going to talk about a high probability trend trade this morning. This is the trade, and this is for you guys that are brand new especially. This is a trade that typically wins 70 to 80% of the time, guys. It's the most basic trade that we teach. It is, I think, the easiest to recognize with just a little bit of study. But it's also the one that takes the most amount of patience because you've got to wait for the rules to be true. But this high probability trend trade, it creates confidence through the memory of success. This is the trade when you take something that wins 70 to 80% of the time and you're winning 70 to 80% of the time, guys, it's hard to not feel good about what you're doing. It gets very difficult to not trust your entries and then be able to hold. So I teach this trade for the first hour because I want to give you the best chance of success. But most importantly, the one thing that I really want you to get out of this high probability trend trade is I want you to be able to focus on reading your indicators, to be able to look at your chart and speak to yourself in terms of a couple very simple advantages, guys, and to take the information that these indicators are giving you. And let me say it again real quick. The high probability trend trade is your first trade. It's not your only trade. It's not your last trade, but this is the trade that's going to turn you into a chart reader, that's going to have you looking at your charts and just saying, oh my gosh, this is great, I need to be in a trade, or whoa, things are a little bit wrong, let me hold for just a second. You're going to spend 90% of your day looking at indicators, guys. 90% waiting for advantages. I was up at about 5:15 Central this morning. It's now 8:06 Central. I took 2 trades this morning, 2 times that my rules were met over the course of those 3 hours. And you know what? It's okay. I'm just paying less commissions and feeling good about it. And that's kind of what you've got to teach yourself in the beginning, is you've got to learn how to sit still when it's time to sit still. Because that 90% of the day, guys, what it does is it keeps you from trading without advantages. And once you can read your indicators, you're going to understand some pretty cool things, like where the market is likely to continue. Initially, this becomes your entries for the high probability trend trades, and it still floors me, the accuracy that you guys show me when you post your trades in this room on those trend trades with such minimal risk and such great profit potential. You're going to understand where the market is likely to go. You've got these giant Fibonacci areas looming in the distance. What a great place to take profits at. And then you're going to understand when those lines are likely to stop the market, you shouldn't take that next trade. And guys, this is a challenge for most new users because this is the thing that forces us to be patient. So when we talk about these likely to stop areas, these termination conditions, pay close attention, ask a million questions, because it is the most broken rule among new users. And there's only 3 rules. And think about it. You've got 33% of your advantages come from just one rule. The first rule says you have to have strong trigger lines. When you have that, you have the advantage of momentum. And you should be able to look at your chart and say to yourself, loud enough to scare the pets, I have momentum or I do not. And then you're going to make sure that there's none of those likely to stop areas. And if there aren't any, you're going to have room to make some money, and we're going to call that a clear path. So every time you're looking for a trade, brand new users, you're saying to yourself, do I have momentum? If I do, Let me make sure there's nothing in the way. And then your third rule is going to put you into the market where the market is most likely to continue. Rule number 3 is going to change for you. As soon as you learn to read your indicators, you're going to start seeing opportunities outside of this high probability trend trade. So I encourage new users, make sure that you are rock solid on momentum and a clear path. And once you are, it just opens doors. And we're going to focus on these and we're going to break them down, guys. And we're going to keep it simple. We're not going to add all those charts you see all those other people using. We're not going to change. Hey, good morning, Jonathan. We're not going to change things up. I'm not going to add different time frame mid bands and reversal bar markers and all this nonsense, guys. We're going to keep it so stinking basic. And I'm going to tell you right now, you do not have to be able to build a watch to tell time. You don't have to know why the indicators are what they are. You don't have to know how they came to be. But we're going to teach you patterns that have been proven to win more than they lose. Was there undocumented news? No? I don't think so, Ron. But there's one of the greatest lessons you can ever get. Ron, we're not in charge, and the market doesn't have to have a reason. The market does not have to have a reason to do what it does. We're just trading patterns. That's it. That's all. And it may spike and it may jump. Hey, good morning, Philip Cox. Good to see you in here. So guys, 2 charts, and more specifically on your large chart, excuse me, we're going to look for the most current bar. Like that first bar on the large chart is going to define the direction of the market. It's going to define the momentum of the market. It's going to define any areas that may be problematic. All of this happens on just one bar, and this is a real slow-moving chart. It's a broad stroke of a brush. You're not going to see change happening fast on it. But the cool thing is when these advantages, momentum and a clear path are on it, because it is such a high time frame, it's hard to change that direction. It's hard to stop it. So we're going to let this one lead the way. 66% of your advantages are going to come off of one bar on the large chart. And then we're just going to take an x-ray of it. When rules 1 and 2 are met, when your rules say, hey, let's go find an entry, let's pinpoint where the market is most likely to continue, we're going to go to the small chart, guys. And it's just a refinement chart. And this refinement chart is going to take all the information from the one bar. There's a black box around the one bar. And the bottom of that bar is going to be the beginning of a pullback. And the top of that bar, in a perfect world, is going to be your entry, where you pinpoint exactly where the market is most likely to continue. And it's this refinement process, using these 20 to 30 bars on a small chart instead of trying to trade tails or something on the large chart, guys. The accuracy is amazing. And it's going to reduce your risk, and it's going to increase your profit potential. And that's where your first rule number 3 comes in. The rules for entry, putting you in the market where the market is most likely to continue. And we use these 2 charts, once again, just like Ron pointed out. Guys, we're not in charge. We've never been in charge of the market. The market doesn't care about your position or your rent or your finances. Doesn't care that your girl's about to leave you because you keep trading in determination conditions. It just doesn't matter. The large crowd, the large chart, guys, they're going to do what they do. They have the power to create trends, to establish momentum, and these are the people that react at those key areas, those key Fibonacci areas. And guys, just going with the flow. Trade with the large crowd is the easiest way to do things. But there is a small crowd, and the small crowd is still so much bigger than you. And they create little fights. They love to fight the large crowd. These guys have attitude problems. And what happens is they create little pushbacks, little retracements. But these guys fail 70 to 80% of the time. You're going to be able to pinpoint through rule number 3 exactly where their failure is most likely to happen. And I want to show this picture, and I haven't shown it in a while, guys. And this is Norbert. And Norbert is the large crowd. This shark is the large crowd. Look at those sharp teeth. Look at that streamlined body. This is the guy that makes things happen. Our job as small traders is to be the remora, to swim along, minding our own business, flying under the radar. But as soon as he rips a tuna in half, guys, we're going to take a chunk. We're going to take a little bit. We're going to eat, fill our bellies, and then we're going to go right back to waiting till he goes for the next tuna. And if you remember that you're not in charge, that this guy's in charge, it makes it easier to be a little patient. And then let's do this. The easiest way to get to where you want to be. So Dunk, I saw that you bought software. Congratulations and welcome. Excited to have you with us. You're stuck with me now, man. You are so stuck with me now. Quickest way to get to where you want to be. Post your trades in the room. If you're brand new, especially post your trades in the room. If you are an experienced Nexgen user, if you've owned software for a while and you're not getting the results that you want yet, post your trades in the room. And one of the biggest things that people do is they decide, well, I was in the room for 30 days and I'm not really new anymore and I don't think I belong there. And guys, that's just so not true. There's always something to learn in this room and you are always welcome in this room. Whether you're taking high probability trend trades, whether you're taking momentum trades, Ron's trades, jumping it, it doesn't matter. Get in here and post in the room, guys. Let's talk about what you're doing and see if there's a way to do it better. The second thing is use the spreadsheet that I give you guys every day. This spreadsheet, it's in your Nexgen Study Picks folder. You can just steal mine. I just dropped it in the chat box. Save it over it. Your first tab is your trade journal. That's all it is. You're keeping tabs on what you're doing. When did I take the trade? What kind of trade was it? Here's a picture of it. Did I have those first two advantages, guys? Those are the only two that I'm focused on here because momentum and a clear path is just, it's a recipe for success. And then there's a section for the feedback from class. This is where if you post in the room and I'm like, hey, wait a minute, you traded right into a line that could have stopped the market, you need to go back and you need to write in that feedback and you need to say to yourself, okay, trading into lines probably isn't my best bet. And you're going to come back and study this first page every morning. It takes 3 minutes, guys, over a cup of coffee or a spot of tea if you're in that part of the world. And just ask yourself what worked and what didn't work and what felt, what made it feel easy, what felt forced. And what you're doing is you're telling yourself, these are the patterns that are bringing me success. These are the patterns that are taking that success away from me. And more importantly, these are the things that I'm doing that might be robbing me of that success. And one of my talents, I don't have many, but one of my talents is recognizing patterns in people. So if you give me 10 charts in the room over the course of, a week or so, and you promise to tell me how you see the momentum, what your read is on your clear path, and where you got in and why, I'm going to recognize your patterns. I'm going to recognize if you jump in early, if you get out late. I'm going to recognize if you're fighting trends or trading without momentum. And you and I will literally just have a conversation every time you post in the room to make sure that we work together to get you away from the problems and closer to the solutions. The second tab, green section, are the high probability trend trade rules, guys. We're creating recognition through repetition. We are doing nothing more than breaking them down individually, the same way I teach them in the room, and you're going to piece these together. So if you struggle with momentum, I've got almost 50 pictures of what it looks like to have those strong triggers. The same is true with weak triggers. And guys, this is what gets people clear path and termination conditions. If that's your challenge, this is your study for the weekend. Go back and look at these pictures and commit the recipe to memory. There's the favorite look section, which is where you're going to build your trading plan. So every time that high probability trend trade sets up, you go back, you study it, all that. Oh, Rob, I've got you figured out. You're going to begin to build a trading plan, right? So, and let me compound on that. So Rob says, I think you know more about my trading style than I do. If I were Rob, and I don't give trading advice, guys, I never have and I never will. I don't tell you what to do. But if my challenges were the same challenges that I've identified on Rob's charts, I'd have a giant piece of paper in front of me that would talk to me about termination conditions before I ever entered the trade. And I would look down at it and I would double check my charts. And I know that it works, Rob, because that's what I had to do when I started trading. I was Like the termination look section used to be called the Mark Novak section because I would trade into them every day. You've got to figure out what your thing is so that you can beat it. Guys, favorite looks is where you're going to build your trading plan. And then this is my favorite looks. I took your page and just filled it out myself. So there are entry sequences, not just the trade, but rather the whole process of pinpointing where the market is most likely to continue. We'll go through those today. There's some management ideas. There's patterns that repeat themselves because that's all the market is a bunch of patterns that repeat themselves. And what you're learning in this room is going to work on any market. That's the cool thing. You can be a stock trader, a futures trader. You can do options. I've seen people do that. I've had farmers hedge their soybean crops. And you're just going to use the same patterns, the same advantages. So go through and study these. The green section is almost 400 pictures of you guys doing great things with the software. They are not all high probability trend trades. Some of them deviate from the rules that I'm about to teach. I want you to avoid the urge to be the trade police when you see things that don't fit the high probability trend trade, because there's education in everything. And if I click on something that I know isn't a high probability trend trade, you're still going to be able to recognize advantages of momentum, and you're still going to be able to see the same patterns for entry. And there's just going to be a little problem there. And that's, it's okay. Most of your trades are going to have problems. We call those medium probability trades. But you're going to rely on your ability to read your indicators to work around those problems. So post your trades, use the spreadsheet. We're going to learn the rules. That's all we're going to do for the first hour, guys. Can you tell I'm wound up today? I feel wound up today. We're going to go over 3 rules. We're going to do it on 2 charts. We're going to talk about what they look like. We're going to talk about what those advantages mean to you in terms of your trading. We're going to talk about how to identify them in the moment. I'm going to teach you how to go back and study them. And guys, my promise to you is that by the end of this classroom, you will have everything that you need to be successful with the Nexgen software. And the only thing that I won't be giving you guys today, the one thing that I'm going to hold back on because I just haven't figured out how to give it to you, is experience, is the time with the software to be comfortable with it, to learn to trust it. And it's like a new relationship, guys. You've got to build some trust. And if you're walking into this and you don't trust me, that's wonderful, because I'm going to teach you how to try to prove me wrong. So, guys, excuse me 1 second. I'll be right back. Sorry about that. Neighbors doing yard work and my dog is going nuts. You guys don't want to listen to Ellie this morning. So we're gonna practice. You're gonna get everything that you need, guys. Promise. Scout's honor. I want you to simulate. Just if you think you have an understanding of the rules, practice trades. If you have absolutely no idea but you're trying to figure out the rules, practice trades. But the thing is, take pictures. Drop them in the room, because what happens is new users that get in the habit of posting right from the beginning. These are the people that get more and more comfortable with it. And these are the guys that get to where they want to be, and the ladies that get to where they want to be the fastest. People that withhold losers. People that don't want to show me because, oh my gosh, here I am in a group of strangers and I don't know this perfectly in the first 3 days, right? I've never looked for you guys in the grocery store to tap you on the shoulder and ask you what the hell you were thinking with that short trade. It's probably never going to happen. Change your name if you're worried about it, right? Steve Diego, be Samantha Francisco if you need to be. Ron can be Renee and Gino can be Gina, right? Doesn't matter. It's the internet, guys. But the pictures and the feedback are what are important. Keep posting them until you're sure that you can follow the rules. Can you guys hear me okay? Yeah. Don't practice the wrong rules. I say this every day. When you get lucky in the market, guys, the luck runs out. And you're building muscle memory. It's like playing your slice on the golf course. Instead of learning how to fix your swing, you just hit it 100 yards left and it lands in the middle of the fairway. Guys, learn how to do it right. Practice the right rules. We're going to simplify. We're going to talk about a high probability trend trade. I'm going to beat this horse into the ground. And that's going to open the door for you for the next trades, guys. Your ability to recognize momentum, your ability to recognize the clear path is going to set you up for success way beyond this trade. But you've got to learn the looks so that they become easy. You've got to commit a little bit of time to getting good at recognizing the information that your chart is telling you. That's where the spreadsheet pays huge dividends, guys. The more pictures you take, the more you write on your chart, the quicker you're going to get to where you want to be. So let's do it. Let's talk strong triggers. Rule number 1, the first advantage, my favorite advantage, if you can have a favorite advantage. The large chart, the big chart, the slow chart, the large crowd, any way I can say it, large chart leads the way. And it has to have strong triggers, guys. And the only way that I can have strong triggers on the large chart is if all the colors match. How easy is that? Unless you're colorblind, I suppose. But if you are colorblind, let me know. I've got a fix for you. Guys, when the background is green, it's going up. In order to have strong triggers, both the small triggers, the solid lines, and the large triggers, the dashed lines, they have to be green too. If they're not, guess what? You don't have strong triggers. Rule number 1's not met. If the small are not above the large, you don't have strong triggers. So the strong trigger look is the small triggers are up and above the large. The large are wide, they're angled in the direction of the trend. Let me draw a picture of a picture. Let's have some fun here. And what happens is you can kind of think to yourself, well, that looks like scissors. And guys, when scissors are open, how's that for some scissors? Looks like Pac-Man. When scissors are open, you can cut. When that space is created, you have momentum. And the same is true going down, guys. I want you to picture scissors open. And when the scissors are open, the space is there, you can cut. Guys, you can't cut with scissors that are closed. So strong triggers is that separation. And when that separation is there, when the colors match, the odds are favorable for the market to continue up. And the odds are favorable for the market to continue down. And odds favorable momentum is what we're going to talk about in the room all day long, guys. You're going to see it annotated on charts, OFM. You're going to hear me say it all day long. Hey, did you have odds favorable momentum? Or did you have those pesky smalls inside of the large, weak, anything can happen triggers? And guys, one invokes just this huge confidence, right? I feel great about odds favorable momentum, a market that's likely to push in the direction of the trend. Strong triggers has the potential to break key areas. And strong triggers will cover some of the mistakes that new users make. And then once those scissors close, once the small go inside of the large, ladies and gentlemen, the advantage is gone. And you have to say to yourself out loud, top of your voice, holy crap, I don't have momentum. Maybe I shouldn't be looking for a trade just yet. So there's only 2 options. In the very beginning, you're either going to have strong triggers or you're not. How's that for some holiday trading, guys? Strong triggers, separation between the small and large, pushes the market up. Look at that, the smalls return to the large, and sure enough, there's a retracement. Strong triggers push the market down, break through some key areas, and then I get that weakness, and I'll be darned, that's the beginning of the end, and off it goes. You can learn strong triggers without ever taking a trade. You can scroll back, and you can just start taking pictures because you're going to see it everywhere. You're going to see strength pushing a market down. You're going to see strength pushing a market up. Guys, I want you to commit this look to memory. And more importantly, I want you to commit yourself to the idea that if these aren't wide and separated in the direction of the trend, the momentum just isn't there. And all of you guys that tried to go short without it probably just got stopped out. And you'll find that this adherence to the rule is going to set you up for success. Guys, there are trading plans built just around momentum. Once you have momentum, though, you have to make sure that you're not trading into an area that may stop the market. We call those termination conditions. Those are the likely to stop areas. A termination condition is nothing more than a horizontal line on your large chart. Once again, the large chart will define areas. When I say areas, that means line. And there are several lines that can stop the market, guys. This is where the large crowd is making decisions. This is where the people that move the market are entering, are exiting. This is where buyers buy and sellers sell and where fights happen. And I'm telling you, the easiest trades happen away from these lines. So we're going to look for divergence highs and lows. And divergence is just a way of saying loss of momentum. If I see divergence from a pivot at a high, it means that momentum didn't follow price. I don't even know about it till like 3 bars down. If I see this blue line, cyan line from a low, it means momentum didn't follow price. And once again, it doesn't happen until like the 3rd bar, guys. There's calculations going through. I'm going to look for Fibonacci resistance. I'm going to look for Fibonacci support. These areas can stop the market, create a bounce. And I'm, going to look for these yellow 1-to-1s. And guys, I'm not asking you to know how these come to be. I don't want you to worry about the Fibonacci, the math that goes into it. What I want you to say to yourself is that every time the market reaches one of these lines, every time price reaches an area, the decision-making process starts, guys. If the buyers are in control, the market is screaming up, it looks like they're never going to stop. If they hit Fibonacci resistance, a horizontal line, whether it is a red fib, whether it is a magenta divergence high, or even those yellow 1-to-1s, I want everyone in this room to just ask themselves, where are my triggers? And if your triggers remain below, if the small and the large have not broken through this area, guys, this is a termination condition. This has the potential to stop the market. This is where it can create an untradeable bounce, and this is even where it could reverse the market completely. If it reverses it, guys, that's a strong top, and that's the precursor for the best of the best going the other direction. And then the sellers bounce, and they come in, and they hit blue Fibonacci support. And some of you are thinking, man, I didn't make any money the whole way down. And some of you are like, I'm never going to be able to buy that Corvette. But if you reach that blue line, if you reach that divergence low, if you hit those yellow 1-to-1s, all you have to do is ask your trigger. Ask yourself, where are my triggers? And if your triggers remain above support, support may stop the market. It may create an untradeable bounce. It might reverse it completely and become a strong bottom. The reality is, and this is the hard to accept part for all you alphas, is you'll never know. You will never know what the market's going to do. You'll never know if it's going to go up or down. You'll never know if a line is going to hold or break. But rules are formed because we took 1,000 pictures of price reaching an area and the triggers were below, and more often than not, it stops the market, at least enough to ruin your trade. That's how rule number 2 came to be, guys. Rule number 2 is the most broken rule because it creates a need for patience. Is everybody good with that? If price reaches the line, let's go to it. The S&P is just putting on a display, right? Check this out. Right into resistance, back to 1-to-1s, into resistance, back to support, right to the divergence high, back, almost broke, back into resistance. Guys, rule number 2 kept you out of a lot of losers if you woke up all Johnny on the spot wanting to trade. Rule number 2 kept you from giving your money away to a market that is telling you that it has the potential to stop. And that's about the best example I could ever give you of how effective and how powerful Fibonacci can be. So if we can't trade into lines, when is the path clear? When can I start looking for my rules to be met? Guys, when the small and large triggers get below the line that's been problematic, the path is clear. When the small and the large get above resistance, the path is clear. Let's look for the entry. When the small and the large are below support, the path is clear. Support becomes resistance, resistance becomes support. It's a pretty cool thing. The line doesn't always go away, it just reverses its role. And it really is that simple. If I reach resistance right here, in the moment, I have to say to myself, you know what? No trade. I don't know what's going to happen. And that's the hardest thing for us to accept sometimes. I don't know if it's going to break support. I don't know if it's going to break resistance, guys. And this is your pause. This is your pump the brakes. This is your, hey, the advantage isn't there. And then once the small and the large get below that area, it's go time. If you have momentum, let's look for that highest probability trend trade. That's the best of the best. This is my clear path. And guys, that clear path is only clear until the next area is reached. And then once you hit the next line, you start the process over. Can you guys give me a Y in the room if you're with me? There's two options, new users. You either have a termination or you have a clear path. This is the easiest, the best of the best, your highest chance of success. Guys, let's just bathe in a little kick-assery before we try to make it complicated. And the cool thing is by now, if you're comfortable with odds favorable momentum and you absolutely believe in the idea of a clear path or a termination, it's going to set you up for your second trade. And I'm going to give you a plan for this trade. And we call this a 50-50. Has nothing to do with the odds of winning. If 50% of my trigger lines, and let me put this in all caps, smash through the area. 50% of my trigger lines smash through the area, but that slower, lazy, large trigger doesn't make it. So 50% of my trigger lines haven't cleared it yet. Guys, this 50-50 look lets me know as long as I have odds favorable momentum. Let's go all caps. Let's make it seem real important. If I have odds favorable momentum and the small triggers smash through the fib, we'll say the area, but the large triggers have not. This area has the potential, I'm going to give you guys this picture, has the potential to break. It is not broken because the large are still above. Does that make sense, everybody? With this momentum and this trigger look, this area only has the potential to break. It is not a clear path. Rule 2 is not met. And why do I say that? Guys, there's a million opportunities that look like this. You have to manage these more aggressively. And you will rely on your chart reading to do that. This is why it's the second trade. Because you need to get some pretty good concepts under your belt. You need to be able to see change on that small chart a little faster, and you've got to understand what you're getting into so that you know how to manage it. So I'm going to give you guys this one. This is the potential to break. This will be your second trade. And I promise you, you're going to get a rock solid plan to take it with the highest chance of success. This picture reminds us that even though this fib is cleared, small and large above, as soon as I reach another area, the process starts over. And I see a lot of you guys going, hey, I had a clear path, and you completely ignore the fib that's been hit. So every time you hit a line, I want you to get in the habit of doing that to yourself. Where are my triggers? Rob, every time you hit a line, where are my triggers? Is it a termination? Do I have a clear path? Is it a 50-50? You need to be able to answer this every time there's an area. And guys, sometimes the path isn't clear because the areas are stacked, Christine. Sometimes you're going to have fib after fib into divergence low, and you're just never going to get that clear path. And it's going to take, man, it might even take an hour, hour and a half, right? I took 2 trades in the first 3 hours of watching the market this morning. It's okay. This is your 90%, guys. The futures markets trade billions every day. You need to make, I think, $400 a day, $200 per contract to find yourself in a 6-figure income with your day trading. That's it. That's all. So wait for the best. Have the advantages, guys. And this is a picture taken, I don't even know when. This was the S&P But there's that range again. There's rule number 2, keeping you out of consolidation. There's rule number 2, keeping you from trading into those key areas. And it's uncanny just how often these areas hold or stop the market. And look at this. Now they're trying to break out, guys. Now there's odds favorable momentum. The fib is broken, but the divergence high isn't. We have the potential to smash up, get out of the range, and really continue the trend that started down here. But can you see how the path is not clear yet? How the back end of the large triggers have not cleared that divergence high? This is a 50-50 look, guys, until that line gets above this pink line. But you can scroll back and start to see how powerful this stuff is, guys. Fibonacci support, resistance, divergence highs. Right into resistance, potential to break but didn't. Support keeps a bounce. And what you'll notice, and I think this is pretty outstanding, I say that decisions are made at these areas, guys. Decisions are made at lines. And check this out. Right at this line, look at how the price dances on both sides. And right at this line, it creates a reversal. And right at this blue line, there's a big pullback. And right at this line, there's a big pullback. And right at this line, there's a big pullback. And look at the dance right here. And even when it breaks, they pull right back to it. If you scroll back on your large chart and you just kind of soak in how it reacts around these lines, you're going to have a better shot at not trading into those lines. So what we're going to look for is odds favorable and a clear path. And once I have my rules met on the large chart, guys, I'm going to go to a small chart and look for an entry. We're going to work our way into rule number 3. But there is only one termination condition that I consider on the small chart. Only one time for the high probability trend trade. When I'll look at my small chart and I'll say to myself, egads and little fishes, I don't have a clear path, guys. And that is 3 divergences. 3 losses of momentum in the same price range may terminate the trend. May, it might, it could. It's not guaranteed to, but my advantage is gone. 3 divergences at a low or a high says no more shorts, no more longs. You're going to see on the small chart that change that you can't see on the large chart. The large chart may have odds favorable momentum and a clear path. 3 divergences says, hey, pump the brakes. We might push up a little bit, or we may push down a little bit. These 3 divergences become more powerful with those anything can happen triggers, those weak triggers. Becomes more powerful still when you get one of those little head and shoulders patterns, the final pivot is higher than the lowest or lower than the highest, guys. It's just saying, I can't push any lower and I'm losing momentum. Man, here comes some change. Let's wait for a second. So those are your first 2 rules, guys. Large chart leads the way. I would encourage you to write that down on a piece of paper, lay it in front of you. I would encourage you to go to Etsy and have a coffee mug made with it, maybe etch it into the mirror. Large chart leads the way, but when the large chart has momentum and a clear path, when those first 2 rules are met, guys, we're going to let that small crowd come in and we're going to hope for the fight. We're going to hope that they try to push it down when everything says up, or we're going to hope that they push it up when everything says down. And guys, rule number 3 is designed to have you pinpointing their failure point. Their failure point becomes your entry. And it is so precise that you're going to use a limit order. You're going to wait for the market to come to you. You're just going to sit there and wait. And you're going to use that limit order at areas. So lines on the large chart can be problematic. Lines on the small chart are going to be used for entry. But here's the key. For the highest chance of success as a brand new user, you want those areas to be inside of what we call favorable large triggers. And we talked about this yesterday and it was pretty cool. One of the things that are true, and I'm going to open up my large chart real quick, and one thing that you'll notice, and guys, price pulled back to those large triggers, and price pulled back to those large triggers, and price pulled back to those large triggers. These large triggers are a moving average, and this is a correction to the large triggers, and it does it right here, and it does it right here, and it does it right here, guys. And one of the things that I know to be just fact is that price returns to large triggers no matter what chart you're trading. Big chart, little chart, range chart, day chart, doesn't matter. Price returns to large triggers. We're only using 2 charts. So what Nexgen has done, thank you Nexgen, is they've taken the large triggers from the large chart, the correction point from the large chart, and placed them on your small chart. We call them synthetic triggers. They have little steps on them. These synthetic triggers are where I expect price to return to on the large chart. And the large triggers, native to the small chart, are where I expect price to return to on the small chart. And here's the deal. When that correction point overlaps, when the large and the synthetic are one on top of the other, like 2 snakes riding piggyback, guys, this is the best of the best. We call this favorable large triggers. It's this look that takes 2 separate correction points and put them one on top of the other, creating one. And when you put a line in there, fibs, mid-bands, yellow 1-to-1s, the market has something to bounce off of to continue with the trend. So for the brand new user, I say it all the time, use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Because favorable large triggers are going to reduce your risk. Favorable large triggers are going to increase your accuracy. And if those large and synthetic begin to separate or split, your risk is going to be elevated. Your accuracy is going to be decreased. When you grow a little bit with the software, guys, when you start to study a little bit, when you begin to recognize patterns, when you get yourself in a position where you're like, wait a minute, this is coming from someplace and the momentum is great, maybe I will get in at that top. You'll make different decisions, but my job is to teach you to understand the best of the best, to give you the most solid foundation to grow from. So, favorable large triggers, guys. And how do we find our entries? Let's do it. How do we pinpoint where the market is most likely to continue? Is that big enough on y'all's screen, or do I need to make it a little bigger? I can make it bigger. Rule number 1 has to be met on the large chart. Odds favorable momentum. Small's below the large, larger wide. Everything is going down, and this is a market that's likely to continue in the direction of the trend. Rule number 2 must be met on the large chart. Smalls and large are below the fibs. The path is clear. Guys, this is a market that is going down fast. So we're going to wait for our smaller, faster chart to try to go up. And that happens with a reversal bar. This reversal bar signals the beginning of the pullback. It signals the beginning of the fight coming from the small crowd. Guys, this reversal bar is not your entry. This reversal bar is going to set it. You're all, yeah, my Texas falls out sometimes, Ron. This reversal bar signals the beginning of the pullback. And when you get the reversal bar, your job, yep, you have a job, is to find those trigger lines, large and synthetic. One is not more important than the other. It doesn't matter if the synthetics are below the large or the synthetics are above the large. You're going to draw a box mentally, or I like doing it physically in the beginning, from the lowest line of the triggers, whether it is large or synthetic, to the highest line of the triggers, whether it is large or synthetic. And this big green shaded box is where I expect price to return. Has nothing to do with my entry, but what I'm doing is I'm establishing a range where I need to look for areas, where I need to look for fibs, where I need to look for mid bands, where I need to look for yellow 1-to-1s. And what we're going to do is we're going to create a window of opportunity. We're going to reduce that big box to a pretty concise point where the market is most likely to continue. This is where the small crowd is most likely to fail. This is where everything is most likely to bounce to continue with the large chart. So from the lowest point of resistance, guys, it can be a fib, it can be a mid-band, it can be a yellow 1-to-1. Please do not get married to the mid-bands. It is an area. Fibs, mid-bands, yellow 1-to-1s inside of favorable large triggers. From the lowest point to the highest point, from the lowest line to the highest line. This is your window of opportunity, or the woo, as Ric Flair called it. And this is the point where we're going to look for our entry, And once we establish that window, the only thing left to do for us is to activate a limit order, a tick or two below the lowest point. If it's a fib, the fib's not going to move. A tick or two is great. If it's a mid band, as price comes up, that mid band's going to come down. So you may need to adjust if that's your line. But guys, this is your entry. This is where your limit order is waiting. This is where you're hoping the small crowd can get to. And sometimes they will, and sometimes they won't. It's either your money or it's not. It's either rules met or not. We are too good at this to go chasing trades. But the cool thing is if they make it back, if they hit that limit order, you're in a short trade. You have the advantage of momentum. You have a large chart that's telling you that it's likely to continue in the direction of the trend. You have a large chart that says everything is below, the path is clear, you've got room to get to that next fib, and you have pinpointed with insane accuracy where the market is most likely to continue. And guys, this is your high probability trend trade. That little sequence that I went through is on the spreadsheet that I gave you. There's also a long sequence, guys. Odds favorable momentum, price hasn't reached an area. Let's wait for a reversal bar. Let's wait for that small crowd to fight. And this is not my entry. This is setting off the process of first looking for the triggers. Dun, 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 dun. We'll do this one a little quicker. From the highest point of the triggers to the lowest point of the triggers. Look how big that is. Holy smokes, that's a huge range. Which is why we're going to look for the areas inside of those favorable large triggers. We're going to look for Fibonacci support. Don't have any. I'm going to look for yellow 1-to-1s. I got some. And I've got a mid band right at the top. Guys, this box is where the small crowd is most likely to fail. These lines beyond the triggers, don't want anything to do with them. I'm going to activate a limit order. Whoops, I'm going to click the same chart. I'm going to activate a limit order just like that. Buy 2, just above that highest point of support. And guys, if the small crowd has it in them to get me, I'm going to be in a long trade. I spend an hour every morning talking about where to get in. I don't talk about management. I don't talk about making money. I don't talk about anything other than pinpointing exactly where the market is most likely to continue. Reminding you guys to use the language, to write this on your chart. Areas inside a favorable large trigger. So often people tell me, I got in at the triggers. Well, the triggers isn't your entry. It's the area inside of favorable large triggers. I got in with the reversal bar, but that's not your entry. It's the areas inside of favorable large triggers. I got in at the fib on the other side of the triggers. I didn't want to get stopped out. And then you get stopped out and it runs for days. Anything below this trigger line is out of the window. Guys, the edge is gone. The advantage is zero. So we're looking for the areas inside. And when there's only one area, it's magical, right? You got one place to put that limit order. And all of these lines on the wrong side of the triggers, I don't want to be in a trade up here, guys. I've lost my advantage. The small crowd's been able to push through the lines, through the triggers, and now we're in no man's land. And once price gets beyond those triggers, you have no idea where it's going to stop, which is why. And this is where some of the minimizing our risk comes in. Your initial stop is going to be placed where the market shouldn't go. I love the phrase, where the market shouldn't go. It shouldn't go beyond the triggers. It shouldn't go beyond the lines inside of the triggers. If it does, guess what? That's part of your 20 to 30%. That's a cost of doing business. I want each and every one of you in this room to be okay with the idea that you will not win every trade. You're trading a pattern that if you go back and recognize it 100 times, you're going to lose 20 to 30 of them. But if you're only losing 20 to 30, it's most likely to get to your target 70 to 80. This is the highest probability trend trade. This is how you're going to study it. Every time you see that crazy good momentum in one of these tails, circle the tail. If it lines up with support inside of favorable large triggers, guess what? You have a high probability trend trade. Let's see if there was any instances that we could use for study. One of the easiest ways, guys, To get comfortable with the software, pull back to support inside of favorable large triggers. Pull back to support right at the top of the triggers. It didn't get below the triggers. This is the easiest way to get to where you want to be. Go back and study. Circle some tails. Look at these advantages. Uh-oh, here comes John Novak with a PSA. I love it. Does everybody see odds favorable momentum on the large chart? Give me a Y if you see it. We're going to have some fun, guys. I'm looking at my small chart. I've got my triggers. There's my reversal bar. What do you say we buy limit to just above that highest point of support? It's kind of above the trigger, but before it ever even happens, I know that my stop goes somewhere down here below those triggers. Let's just see if it works. Why not? The momentum is killer, isn't it? Guys, that's the best look ever. I haven't reached Fibonacci resistance. And I've got two lines, one on top of the other, right there at those triggers. And those triggers are kind of splitting a little bit. Which means I'm just above the second correction point. And we're in. And guys, my stop's got to go where the market shouldn't. And this doesn't guarantee a winner. And this doesn't guarantee that you're going to get paid. And it doesn't guarantee that the market's going to go up. But this is my best chance of success, guys. To have odds favorable, to have nothing in the way, to enter at the area right there at the triggers, and then just look to make some money. But your job in the beginning is to pinpoint an entry, guys. And if this market goes up, you're going to see a tail. And if it goes down where the market shouldn't go, we're going to get stopped out. And either one is okay. Because we don't worry about the result. We're going to focus on the method. We're going to focus on the pattern that brings us the highest level of success. And your job is to watch it, to study it, to learn to trust it so that you never miss it. And the easiest way to get good at it is to take pictures, guys. Take pictures of strong triggers. Take pictures of weak triggers. Take pictures of clear paths of termination conditions. And annotate your pictures why. Why are these strong triggers? What rule does it go with? What does it mean to me? And if you do this, if you go through this and you finish this process, guys, you're going to be a killer chart reader. But within the first 30 days, you're going to be amazing at it. And if you want to check yourself to make sure your pictures are accurate, I'm going to give you the high probability trend trade checklist. There's a termination that reverses the market. This is a strong bottom. Momentum, weakness, termination, potential to break, broken area. Where does my limit order go? How do I define my entry? Kind of cool, right? And then finally, I'm going to give you guys the KISS plan. Guys, this is your best chance of success as a brand new user. This KISS plan is designed to optimize your chances of success with the high probability trend trade. This KISS plan is designed to give you the best chance of success, to help you learn to read your indicators. This KISS plan is designed to be your first trade, not your last trade, just a foundation. And through simulation, study, class feedback, continuous practice, guys, you're going to be empowered to craft a plan tailored to your personal goals based on your ability reading the indicators. You're going to be able to create a plan that suits your needs once you can start to recognize advantages, guys. But until then, here's the easiest way to get it done. Never fight the large chart. Don't fight the large chart. Don't fight momentum. Don't trade into areas. Go with the flow. Define your entry. That's all we've done, guys. For the last hour, all we've done is define an entry. Getting into the market where the market is most likely to continue. Being able to pinpoint that bounce spot. And then once you're in, once you get these entries, guys, you got to manage it. You've got to say to yourself, there's more to it than just entries. I'm going to have to manage it. And your management plan will be dependent on the trade that you're taking. So in the very beginning, let your management be just as mechanical as your entries. So if I get in where the market is most likely to continue, guys, once I get a reversal bar, I'll reduce my risk. Notice how it didn't go 4 or 5 ticks outside of those triggers, kept us safe. There we go. Let's make money. And we'll see how far this one goes, but I'm going to get out of it so that we can talk about it and get back to the KISS plan. and I'll show you guys exactly where the entries and where the exits were. Your management plan is defined by the KISS plan. As you get in where the market is most likely to continue, and guys, your stop is where the market shouldn't go, and it kept us safe. We pulled $100 on the first contract, and our second contract, if we reach 42, is a $200 winner, which makes it a $300 trade. And that's exactly what's inside of your spreadsheet under management, guys. Once you get in where the market is most likely to continue, you're either going to get stopped out or you're going to get a reversal bar. And if you get a reversal bar, that's your first stop movement. Once you get the reversal bar, you're either going to hit your first target or you're going to get stopped out. You'll never be in control of which it is. But if you hit the first target in the KISS plan, it's only $100, which means you have $100 worth of good feeling. Your palms dry up, your stomach stops turning. You've been paid, and now you're going to go break even. And the only reason you would ever go break even as a brand new user is because you're learning to trust the large chart. You're learning to believe in the idea that the large chart leads the way, that momentum is absolutely outstanding. And guys, you're either going to get stopped out with absolutely no loss or it's going to hit your second target. In the KISS plan, the second target is $300. $300 or $200. It's a $300 trade. $200 from your entry, guys. This is the most basic, mechanical, emotionless, pragmatic approach to management you'll ever get. And until you can read your indicators, this is your best chance of success. This is going to teach you to react in the moment, to start to move stops, to recognize conditions. And guys, you will grow outside of this. And that's where the 50-50 trade comes in. It's on the KISS plan. It's attached. You have to be able to recognize a strong top or bottom. That comes from the high probability trend trade. You have to be able to recognize momentum, once again, from the high probability trend trade. You have to be able to recognize divergence. Well, that comes from recognizing it, those divergence lines, those three divergences from the high probability trend trade. And then you're going to use that high probability trend trade entry. It says that you can't have divergence. It reminds you that you shouldn't have divergence. Your management plan says if divergence prints, exit the trade. Is anybody in here kind of feeling that divergence might affect a trade adversely? That divergence could be the reason that these 50-50s fail more than they win? Guys, the KISS plan is designed to optimize your chances of success. Embrace it. Follow it. Make it easy. Oh, look at that. They went right to the fibs. Shoot, dang heck, I should have stayed in that trade. I bet you some people are going to show me this trade with a little bit of experience. But do you guys see it? I pinpointed right where the market was most likely to continue, just like everything I've been talking about for the last hour. And sure enough, right to my target. God, I love this stuff. I hope you love it too. If you don't, something's wrong. We got to talk. So guys, I'm going to give you all of that stuff that I just talked about. I'm going to give you Chart Reading 101. I'm going to give you the High Probability Trend Trade Checklist. I'm going to give you the KISS plan. What I'm also going to give you, let me go to it, is I'm going to give you this thing called Daily Goals, guys. Daily Goals. I love this sheet. Mark, I have to make at least $500 a trade to get to where I want to be. Bullshit. Pardon my French. At $200 a day, $100 a contract, if that's the best you could do, and guys, everybody in this room tells me that they can make $200 a day easy, but not everybody's doing it. That's 50 grand a year. Double it, it's 6 figures. Double that, it's 6 figures twice. The goal isn't to catch all the moves. The goal is to catch the best moves. The goal is to get paid, ladies and gentlemen. This is your job, right? This is your job. This is your new job. You're learning how to replace your old job. You're learning to have expendable income. You're learning how to enrich and enhance the lives of the people that you love. Focus on getting paid. Focus on making money, because I promise you, I don't make a lot of promises, but I'll promise you, if you keep it simple, if you keep it focused, you will have the means to be consistent. The further you stray from simplicity, The further you stray from advantages, the less likely you are to win, guys. So this is the other one that was in that little bunch of stuff that I gave you. Before you ever go live, and we all go live too soon. Everybody I've ever met goes live too soon when they're not ready, when they don't have a plan. Before you enter that prop firm, before you fund an account, before you try to do it for real, you need to know two things, guys. You have to know why you will enter a trade. And not just why you'll enter. You have to know what your rules mean, what they look like, and you have to go back and find that pattern so it's easy to recognize. That's what this class does. We teach you the easiest high probability pattern. Why will you exit? Rob, that's your next challenge, right? Why will I exit? Guys, as a brand new user, it's easy. This is it. I'm getting in a high probability trend trade. And my KISS plan is going to get me out. And that's it. And I'm learning how to read indicators. And I'm learning how to manage. And I'm keeping it super simple so I don't confuse myself. Your job in the beginning, and this is why we say don't practice the wrong rules. Commit to having the rules met. And you're going to break all of them as you learn, I promise. And you're going to break them even after you know them. You're human. It's okay. Don't beat yourself up. Get back on track. Rules are patterns. That's all they are. They're patterns that have been proven to win more than they lose. Mark Douglas, the late Mark Douglas, was brilliant in psychology. And he has a video where he says, if you had a coin, heads and tails, and it was weighted so that it landed on heads more than it landed on tails, and you knew that this was a statistical advantage, would you ever bet tails, guys? And everybody in the room, you don't have to answer, no, of course I wouldn't bet tails, because I'm going to win more than I lose on heads, right? I can't not make money. These patterns have been proven to win more than they lose. And the more you stray, the more you deviate, the more it's that one time you say, well, I'll try tails just in case, and it's going to land on heads, right? So the more consistent in action you become, the more consistent in profits you typically become. And your process yields the results, guys. We're not focused on the wins and losses as a brand new user. We're focused on the execution of the method, because the method is what produces the results. And then once you start to stray outside of the high probability trend trade, your management has to change, right, Rob? If you're taking a 50-50 trade, divergence should take you out of that trade. That's not a signal to create larger stops and hope it doesn't get you. This is a time-tested plan that tells you your advantage is gone. Let's exit the trade. Let's preserve our money and wait for the next best. As you grow as a chart reader, you're even going to see more things that'll take you out of the high probability trend trade or force you into a management. But in the very beginning, guys, keep it simple. Simple is effective. Simple is consistent. Simple is easy to repeat, and it's easy to study. And that's my soapbox for today. And look at that. Termination condition with weak triggers, and son of a gun, down goes the market. You don't have to be in every move, guys. If you got in long here and trusted your rules, you made at least $300. And Joel, you tightened your stop, didn't you? You weren't 4 or 5 ticks beyond where the market shouldn't go. You put yourself right in the path, and they got you. And then they ran all the way to resistance. And guys, this is why adherence to rules. If you're not comfortable with the risk, don't take the trade. But arbitrary stops where the market should still go, guys, they're going to get you every time. It's like they have cameras right behind you. What a great lesson, though. You've got to take those. You've got to take those kicks in the clackers every now and then to remind you that your plan is a good plan. It's a solid plan. That your plan is full of advantages. And guys, 1, 2, 3 divergences in the same price range. No areas inside of favorable large triggers. There's a 4th one even higher. And look what the market's doing. Now you can hope that it goes down, right? And some of you are going, I'm going to go short at a red line because it's a red line and it should go down. and you're going to ignore the triggers, and you're going to ignore the direction, and you're going to ignore the trend, and you might get stopped out 8 times as that market goes up because your opinions are so damn important to you. Just follow the rules, guys. You don't have momentum. That's it. That's all you need to know. So, are there any questions about the high probability trend trade? I promised you everything you need to be successful, guys. You have it. The only thing you need now is repetition. The only thing you need now is to practice it until it becomes easy. Are there any of the concepts that I can clear up, that I can expand on? Is everybody comfortable with momentum? It's a pretty easy look. Separation of the triggers. Is everybody good with the idea that when you reach one of these lines and the triggers remain below, no more long trades? Because the path isn't clear? Because more often than not, it's going to stop the market, even if it breaks every now and then? And then, guys, after that, it's just finding your entry. It's trusting the areas inside. You will survive, Joe. Because you know what happens is you're not going to forget that that wrong stop kept you from your money, right? You're not going to forget that moving your stop too soon is the reason why you didn't get paid on that trade and why you took a loser. And I get it. When I first started trading, guys, I would put my stops where the market was still likely to go, and I'd get stopped out, and it drove my brother nuts. He's like, you've got to trust. You've got to do the rule and trust. And amen, Pete. That is words of wisdom. If you're uncomfortable with a stop 5 ticks below the triggers and it's too much risk, don't take the trade. But only you can decide that, right? And then as you grow with the software, who knows? You'll be able to discern whether or not it's that entry is of value to you. So, guys, I'm going to leave you with the S&P real quick. Just watch it. See what happens. I can't go up and I can't go down. Dang it. I have to wait. I'm going to take 5 minutes. I'm going to run a lap. I'm going to go pet my dog behind the ears, guys. Post in the room if you have a trade. And I want to remind you, guys, we're holiday trading here. Monday is a holiday. Most of the people that do this for a living are on their boats having a good time. So the volume's probably a little lower. And, you know, who knows? Who knows what's going to happen? And, guys, read what Pete wrote. That is the voice of experience coming in. And the cool thing is, and Pete, I hope you don't mind me sharing this, is Pete's still learning. Pete's been with us for a while. Pete's a very successful trader. And Pete's still coming to this room and he's learning stuff. And guys, I'm telling you, I teach this room and I'm still learning stuff every day. Sometimes I learn it from you guys. Sometimes I learn it from my brother. Sometimes I stumble upon it when I give a lesson in this room. Don't ever stop being a student, guys. Don't ever stop being a student. You'll never know it all. You never will. That's for your teenage kids. They're the only people that get to know it all. So I'm going to take a break. I'll see you guys in 5 minutes. Post them if you got them. Ask a question if you have it. And we'll see if we get any rules met today. Back in a minute, guys. an hour. Joe, I know how to get it wrong. I love that. Good morning, C-Dub. You got to know how to get it wrong. And guys, once you know how to get it wrong, you know what to avoid. And this is why I'm so glad you posted that. This is why I think mistakes are amazing. This is why I think posting losers is the most valuable thing that you can do in your education process. Because just speaking from experience, guys, I used to take this long right here directly into a termination condition. And this was my result. And I would lose it. And I must have lost trading into areas 100,000 times. And my brother told me, he goes, hey, how many times are you going to trade into these lines hoping they break instead of just sitting still and being calm? And I was like, I don't know. I got at least another 1,000 in me. And I did. I had at least another 1,000 in me. But you've got to make the mistakes. You've got to identify where your problem spot is. And guys, I promise you, I've made every mistake that's ever been made, and I know how to fix them. So all you have to do is share with me. And if you do, we're going to get where we want to be. You're going to get where you want to be. So Rob posted this one this morning. What am I seeing here? I love that you're asking yourself. I see odds favorable momentum. How's your path, Rob? That's the one I want you commenting on. Rob, did you have a clear path or no clear path? You guys want to do this together? I know it's hard to type. Well, you posted it, silly. Look at the one you posted. So check this out, guys. Let's go back to basics. And Rob, this is such a great chart. I'm sorry you can't see it. So odds favorable momentum? Absolutely. Clear path? Heck yeah, guys. The only time this mid-band is a termination condition is if the large triggers are a full bar away. See how all the triggers are below the fib? Guys, this is beautiful. This is a great look. And Rob says, here comes my reversal bar. Let me draw a box from the bottom of the triggers to the top of the triggers. You can see it now, Rob? And then let's refine from the lowest point of resistance to the highest point of resistance inside of those triggers. And Rob, the only thing I can say about this is what if it's the lowest point of resistance inside of favorable large triggers that creates that bounce and pushes that market down? Wouldn't it suck to miss that trade? Your stop goes in the same place no matter what. Wouldn't it be horrible to watch that fib hold and that market go down with all that momentum? And you're just like, dag nabbit, I wish I would have followed rule number 3 that says put my limit order just below the lowest point of resistance inside of favorable large triggers. This is what John Novak calls tripping over pennies to save a few dollars, whether it was intentional or not. But this is where, this is where the window of opportunity pays dividends. And I love all your entry pictures, Rob. I want to see the end of them too. I want to see what it looked like at the end. I had a 50-50 on that particular trade. I had a very different look than you, I think. That was a loser. And the stop would have to go up here. And if you're not willing to take that risk, don't take the trade. This one didn't work. I had a fib though, Rob. So mine was only a 50-50. It's still a great looking trade. And your read is outstanding. Just like Pete said, I get all the stuff that I teach from Pete, guys. I don't know nothing about nothing. Pete's my mentor. I do, though. I do learn from Pete. So, Rob, dig it, man. What a great look. This would be one of those ones that didn't work. So, one of the great things about posting in the room is we talk a little bit about that. But more than anything is I want you to know that your read was great. Dude, your read was spot on. And sometimes we have to hear that. We get so focused on beating ourselves up that we forget to celebrate. Forget to celebrate the good stuff. All right, Gino. Man, this is the fib update. Got you, Gino. So you had odds favorable momentum. You had a 50-50 look, without a doubt. No divergence. Look at that entry. What a beautiful entry, Gino. And then down here, when that fib updates, that's your potential trouble. And man, it's an update. And it got you. Good job getting paid. And they just, well, is that midnight? That fib came in and changed the idea. Great trade though, Gino. And this is where you're just getting paid, right? If you're in at 47.4, you take 100 off at 46.4, right? There's your $100. Go break even. If it drops, cool. If it doesn't, no worries. Great trade. And then Cheetah, you know I want to talk to you about this. So you're trading a 21.3 with no fibs on it at all. No synthetics, nothing. Just going commando. And then you're trading a 13.2. And you're trading a 13.2 without synthetics. I feel like you're robbing yourself of an awful lot of information. You have to click in tick data from data series. Make sure that tick data is active. Why are you trading a 21.3, 13.2? Just curious. You're creating your own. I don't think you did. So do this. Right click, go to your templates, load on NASDAQ. You need the Nexgen NASDAQ 13.2 dynamic Renko bar. If you just put in a regular 13.2, that one's not designed for the NASDAQ. And that's, I think, why your synthetics aren't there. But why the 21 and not the 34 like it's in the workspaces? Just curious. And there's no fibs. And that's okay, but these are the things that I notice if you guys post it in. And basically, you went long because of one blue line, even though everything said down with momentum. Does that make sense? If you say it like that, entered at the fib, entered at the fib against momentum, entered at the fib against the trend, entered at the fib against the large chart, the small chart. And if you entered at the fib, did you make money on this one? So where's the rest of it? Why not show me the pictures where you had challenges, right? Because if you made money on this one and you're still down 180, you're hiding stuff. You're showing off a little bit. You're showboating. Hey, look at my great trade. Where did you give it back? That would be my question. But you're trading with a lot of missing information. And if you go to NinjaTrader and go to Workspaces, Nexgen gives you a NASDAQ chart with everything that you need. And it's built the best of the best way by John Novak to give you exactly what you need. And then if you don't have those in there, maybe you overwrote them or something, just go to the resources. Okay. And rerun the indicators. So And Cheetah, I hope that this comes in the spirit that it's meant. So, weak top, you're saying mid-band's likely to hold, right? Did you notice the gap theory too? We're going to celebrate the read on this. Did the gap theory come into play for you on your large chart where those large triggers were a full bar away, letting you know that the mid-band is a termination? And then coupling it with another termination? No? So it was even better than you thought. This is where the mid-band may hold, Cheetah. But with your large chart, remember, this is a 13-2. This is a big honking chart. With it screaming down this way, your easiest entry to make sure that you're at least on the right side of things is going to be a close on the correct side of the small triggers there. Does that make sense? Because once you get on the other side of those small triggers, you're not really fighting everything. You're saying the mid-band or the area is held, I'm on the correct side of momentum, and now your stop is established as well. There's a lot of beautiful, beautiful chart read that goes into this, but the gap theory was one that even supported it even more. But on the NASDAQ, one of the biggest mistakes that new users make is fighting these small triggers on the 13-2. Because remember that the 13-2 small triggers are the small triggers on this chart, your large chart on any other market. And I know that you wouldn't just arbitrarily go long against that look, right? You'd be like, whoa, that's fast. Let me pump the brakes. Yeah. So I think people forget that there's the size difference between the two. And your entry chart for the NASDAQ is actually your large chart on any other market. Great trade, though. I like the trade, Cheetah. And then the fact that the gap theory was there, it just added a bonus that you didn't even know was present. And then Rob, this is awesome. And we already talked about this morning, but I wanted to share it with the room. Large chart leads the way, guys. Large chart definitely does not say up. Large chart has no momentum to the upside. Large chart doesn't even have a clear path to the upside. And Rob did what I've done a million times. Yeah, dude, Cheetah, it was great. And I like to look for the reasons that things are good. And I'll never not tell you that you're fighting stuff, but I'll always try and find the good stuff too. And then you see the small chart, and the small chart is like, hey, Rob, take a long. Trust us. We're the small crowd. We always win. And Rob's like, oh, it's the small crowd. I love these guys. These guys are fun at a party. But the large chart never even set up. No momentum. And guys, does anyone remember what crude oil did right off of that area? Dropped like a ton of bricks. And I think Rob canceled his order. So great job canceling. Good reason. Great chart read again, Rob. And sometimes avoiding losers is just as important as catching those winners, right? Good stuff. All right, let's see who's next. Not a lot of pictures being posted today. Ron's got one. Ron says, check it out, Mark. With momentum and a clear path, I'll find a way to make some money. I love it. And then he comes back and he says, so I don't know if I mentioned it, but with momentum and a clear path, I'll find a way to make some money. 2 for 2, Ron. And I told you guys, once you understand momentum and clear path, once you can pick those two out of the lineup, sky's the limit. Sky is the limit for you guys. And yeah, Rob, beauty. I'll support this trade 100% every time. Every time. It just didn't work. And you were hyper-focused on getting an entry point. You didn't notice 2 divergences. 2 divergences isn't a deal breaker. But this isn't odds favorable because it's not strong triggers yet. But your entry is perfect. You have strong triggers on the small chart. It just didn't work out. And again, this fib, 5630, should have been right there. But you still had a clear path. You just weren't working with momentum, Rob. That's it. That's the only thing missing from the equation on that one. Thanks, John. John just told me, shut it down early. Start day drinking. FaceTime me when you're drunk. That's what that means, guys. And then Joel. Was this Joel? Who was this? I thought this was Joe. Joe, this is you, right? Waited for the trigs to talk me into it. No, whose chart did I click on here? I get sideways sometimes. Run, run, run. I thought it said Joe. No, that wasn't it. Whose chart did I click on there? Guys, help me out. No. Ron, was that you again? No, because Ron doesn't put JTFI. This was you. You did say JTFI. That's what confused me. Beautiful, right? Strong triggers, clear path. Easy money. I love that JTFI stuck and turned into a thing. That's awesome. It worked. It's not hard to confuse me, Ron. All right. And then, Joel, we talked about this one, right? Got to trust those stops. Got to be willing to accept the risk. Such a good look. Just a little closer than you needed to be. And then Kurt, MES, odds favorable, clear path, perfect entry, stop got you. What time was that, Kurt? That was yesterday? Just didn't work. I love that look. I'd take that look all day long. I don't think my stop would be that far. If the synthetics are at 1075, I'm at like 9 1/4. Does that make sense, Kurt? And I want to do this, and I really think this was a lesson John Novak used to do to me. I'm going to show you where you got stopped out. Is that where you want to enter a long trade? I think that this begins to pay dividends when you start thinking about stop placement. If this market's really going to go up, man, that's probably not going to be where it goes up from, right? Wrong side of the mid band, way below the triggers, all that sort of stuff. 4 or 5 ticks, man. I like it. It's a great looking trade, Kurt. Great looking trade. But then, because you lost that one, it's the MES. This one would have got you too, man. The MES is not the ES. I can't stress that enough. The MES is not the ES. And it's going to move just a little bit different. So, yeah, but you shouldn't have. Kurt, you formed an opinion that made you not follow your rules. Does that make sense? Because the first one didn't work, you decided that the methodology was garbage and you skipped a trade. You got to take these losers. No, that's a horrible way to look at it. Because this is your trade, right? This is your rule. So you got to follow your rules. Hell or high water. Your rules have been proven to win more than they lose, and you got to believe in it. C-Dub, everything's cranking up. You take the momentum style, get paid on the way up, get out with the loss of momentum, re-enter a little high. They caught you with a head fake. Stop goes where the market shouldn't, and you get paid again. C-Dub. Somebody ate their Wheaties this morning. Great trading, dude. Isn't that awesome? In on the momentum, anticipating the break. Gets paid twice. They faked you out, right? Instead of the area, you gave a little bit up there. Yeah, no worries, Kurt. It was a great one. It was perfect. It's just part of the 30%. Thanks for saying that, John. C-Dub, high five, man. Virtual high five. That's it. We made it through all your pictures. So what are we looking at now? Let's get to some live market, see what's going on. Termination stopped it again. I wonder how many times that happens a day. Termination starts to break, pulls back, termination, on the way. There's your high five. I love it. Here, hold on. I got you. I won't leave you hanging. Boom, right back. So what are we waiting for now, guys? Price reach resistance. The small triggers are there. We need those small triggers to break above, right? We need to at least have the potential to break if we're following that KISS plan. It'll do it every day. C-Dub, did you notice that you traded with direction, with momentum, and you did your best to trade from areas? That's a pretty solid recipe. I say it every morning, guys. Once you figure these two out, once momentum and a clear path become second nature, it's hard to not get paid, right? And then once you start to fight it, things go sideways. And John, volume will start to dry up soon. Head to the lake. I even said they're out on their boats. I guess that's where I got it. I got it from you. So what do you guys want to talk about? It's about 10:30. I've got a divergence low here. I've got resistance creating a bounce here. Split triggers. How are we doing? Dunk, how you feeling? Obviously you like it. Let's start learning it, guys. So this weekend, one of the best things you guys can do that are brand new is fire up your market replay. I try to replay at least a couple days every week. But market replay will let you go back. It'll let you fix mistakes. It'll let you practice your plan. And one of the coolest things about market replay, guys, when you do it, is before you enter a trade, it's not like I have a picture here of it. Before you enter a trade, you can hit pause and you can look at your rules and your checklist and make sure that it is the right trade to be entering. And market replay not only will give you some repetitions, but you're also going to see the potential of what your plan has when it's followed. And I think that's really important. And then C-Dub, you wait for the reversal bar because the triggers aren't perfect, but with all that momentum, you take it all the way up. That's a good morning, brother. 2150? Is it easier when you wait for areas, C-Dub? Because the change in your charts is subtle, but man, what great changes. What great changes. Because you used to jump in here and wonder why you got stopped out here. And now you're waiting for the bounce, getting in, momentum. I love it. This is where I have those proud daddy moments where I'm like, oh, they listen. They listen. Anybody can do this. And if you're not doing it, you might be making it too difficult. You might be working harder than you need to. All right, guys, what do we want to talk about? This is where I flap my gums for 20 minutes, and if nothing happens, then we call it because of the holiday. One of the things that I want to share with you guys is, where is it at? I shared this the other day too, and I want to share it again. This is a little excerpt, Mark Douglas teachings. Late Mark Douglas. And guys, I would encourage you to go to YouTube and look at some of his videos, because the patterns that we teach aren't difficult, guys. The rules aren't hard to learn. They're really not. The biggest challenge and the biggest difference between successful traders and the people that are still struggling is that willingness to just do nothing. That willingness to sit still when the advantages aren't present. And one of the biggest things, and I think this was very liberating for me, is my brother used to always say, I don't care if my stop gets hit. I don't care. It doesn't matter. I have an advantage. And I couldn't fathom it. I couldn't fathom being okay with losers. And you realize that it's a part of trading. It's a normal part of a positive equity curve. So when you stop expecting to win every trade, guys, you really do start winning most of your trades. And when you start caring about the execution of the method and not the result, because it's the process that yields results, and you're more focused on those advantages than you are what those advantages are going to provide, guys, the provision comes. And when you believe that you know it is what's going to happen, right? So, Kurt, you believed that that one was going to fail because of what happened one trade before. It's not one trade at a time, guys. It's a collection of trades. It's taking a whole sample and then figuring out if the look. It's okay. I'm not beating you up at all, guys. My house is the biggest glass house that anyone will ever be in, so I don't throw stones because I've made every mistake that you guys have ever made, and that's one of the reasons that I recognize them so quickly, much to your dismay. We all do, Kurt. Everybody needs to be more disciplined. That's the hardest part. But you have to believe that you don't know what's going to happen. You have to believe that you have no control. You have to believe that the only thing you have going for you is trading that pattern. Trading that pattern that has been proven to win more than it loses. Because all there are is up and down ticks, guys. That's all the market is. It just goes up and it goes down. And the emotional pain comes from what you believe. You create your own pain based on the experience. And that's really it, right? If you know that the rules win more than they lose, why would you ever hesitate? It's because you think you know what's going to happen next. And you don't. You just don't. So when you're fearful, every trade is life or death. Pain ticks against you, guys. That's not how you do it. So we all can. And this is the biggest one, guys. Your rules eliminate the need to know what's going to happen next. And until you trust your rules, you're going to continually try to predict and hope. And oh, I sure hope it goes up. And that eventually changes to, man, I don't give a shit if it goes up or down. I've got momentum and I'm coming from a termination. And there's an area right inside. And you know what? This one might get me. But I'm going to take it anyway because I see more advantages than disadvantages. And I'm going to put my stop where the market shouldn't go. And it's a 50-50 with divergence, guys. And I took my loser, and let me show you something. This is the most important thing that you can do. Is you have to go back to that trade. And you have to say, odds favorable momentum? Yes. Clear path? No. Only potential. And then I have to come over here and I have to say, my rules say no trade, come on, if divergence is true. This was an avoidable loser that didn't have the advantages I needed to really feel good about entering. Does that make sense? So if you break a rule, you've got to go back and you've got to make sure that you say to yourself, and guys, this is the hardest thing to do because it means that we're holding ourselves accountable. I have to go back to my KISS plan. I have to go back to the 50-50. Oh man, it told me twice. It told me twice that this one is less likely to win than or lose than win because this is designed to optimize my chances of success. And guys, the 50-50 is the most lost trade, and I would almost guarantee that there's people in this room that took that trade and just got stomped out. Anybody care to admit it? Because they hoped it would go up, but their pattern said you're more likely to lose. And guys, this is it. This is holiday trading. Do you see the range? How do we find trend trades if there's no clearly defined trend? This is where we're going to shut it down at 11, guys. Term to term to term, and now it's bouncing back up. Not every day is a series of home runs. So price reaches, trigs don't break, thought it was going long, and it tanked. There you go. So Rob, just out of curiosity, you thought it was going long up here? Or right here? Up here with odds favorable momentum in your clear path? Psh, that's a good looking entry that didn't work. Yeah, dude, that's perfect, isn't it? Odds favorable. You had a clear path, and it pulled right back to support inside of favorable large triggers. That's the perfect trade. You got stopped out. But you're not running your synthetics. Your synthetics aren't on that chart. So Rob, one thing I want you to do, until we figure out how to get your synthetics on that large chart and make them stay. If you see a fib on your small chart at 56.40.52, I want you to draw a line on your large chart. Because this fib belongs there. And suddenly this is a 50-50 trade. But yeah, Rob, if you took this entry, rock star. Your stop was about right here. You took a loser. It's perfect. 100% perfect. On your chart, 100% perfect. Just an example of a long I wouldn't take. Triggers roll, separate, odds favorable, potential to break, pull back to the mid-band in between the large triggers, wait for the reversal bar to entry. Why you stayed out? Because the stop would have gone here and not accepting that much risk. Amen, Pete. So what does waiting for the reversal bar do for Pete? It gives him a place to put his stop right behind that reversal bar. Nice one, Pete. Good lessons. Odds favor momentum. Divergence wasn't there. No, it wasn't. It wasn't there when you entered. You got in at the area inside of triggers. Your stop was perfect. Kenny, this is perfect. It's perfect. You had odds favorable. Your path was clear. Your momentum was amazing. Your entry was solid. Just didn't work, brother. And this is where you guys have to ask yourself. So let's go through what today is. Today is the day before a holiday. Right? What time was it? If my patterns are met, they're met, man. That was like 10 in the morning. That was fine. But look at what the S&P is doing. Do you guys see it? Do you see a market that isn't following through? Do you see a market that's given the potential to break but isn't breaking? Do you see a market that's bouncing off of areas? And even more so, how many perfect trend trades have we seen not go? Guys, sometimes the market isn't going to behave. Don't try to force it. Accept it. Just accept it. This is the day before a holiday. It's a long weekend. The people that move the market, they make money every day because they have a solid plan. No, Kenny, it can never be. It can never be a strong bottom if the triggers get through. Ever. It has to be no triggers through. No triggers through at all, ever, 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 ever. Good question, Pete. You guys waiting for confirmation. That's your stop placement. Clara, you haven't posted in a while. Let's see. Odds favorable up. Yep. Clear path. You're so close. Strong bottom from the divergence? No, ma'am. Because the triggers got through the divergence low. This is just two divergences pushing it up. You take the perfect entry, and then you got scared out because of possible divergence. So, Clara, if you're driving down the road and you see a green light 200 yards ahead of you, do you start slowing down because it might turn red before you get there? No, of course not. Why? But the potential for it to happen is always there, isn't it? Because you're a live in the moment kind of lady. You got to do the same thing. Divergence potential is just potential. And Clara, I've seen a market run 50, 60, 70 points with the potential for divergence all the way up. I've gone through some orange lights in my life, Ron. So it's okay to be aware of it, Clara, but until it prints, don't give it that much power over you. Otherwise, you're going to be causing accidents in the middle of every thoroughfare. Yeah, but that's totally normal. If I had a nickel for every exit that I took because of the potential divergence, only to watch it go, and I had to break that 1,000 times, so I learned to not react to just the potential. Let's see if we can find one of those examples, right? Whoops. So, and of course there's no divergence potential here. This is divergence potential on this bar. It won't be true until the third bar if it's going to happen. And you can see it, it's fluctuating back and forth. But it may never come to fruition. And this one's trying to create divergence potential. But if the market goes up, do you see how it disappears and goes back and forth? Oh no, I'm making... I did, Pete. So Pete's question, for you guys that read it, Pete says, if you're going to wait for a confirmation bar, where did your picture go, Pete? If you arbitrarily jump in, this is your stop, right? Below the lowest trigger line. If you wait for a reversal bar, does everybody remember from the KISS plan, a stop 2 ticks below the reversal bar? Waiting for that confirmation bar, guys. It gives you someplace to put your stop 2 ticks below it. Man, Ron, have an awesome long weekend. I will see you on Tuesday, and I will call my dad and all my friends and thank them. So yeah, guys, confirmation when it's not perfect gives you something to put your stop behind. It's pretty cool. Pretty cool little trick. And guys, once again, terminations for the win. How many times can you try to take the trade in the range? 2 ticks below the first reversal bar. That's it. What if you get stopped out, Pete? Should you change your plan? Oh well. Better a small loss than a big loss. All right, ladies and gentlemen. 2-hour class today. We're going to